Welcome all traders to their daily look ahead. This is where we take a look at gold, the dollar, and the mini NASDAQ to find out what types of trades we can take the following day. But before we dive into the charts, make sure to like and subscribe so that more people can enjoy this content. Hello traders, this is the look ahead, and it's the look ahead for April 11th, 2025. Gold did not hold the break here. It came up back above, and now it has reached a new high. So we see this swing moving up. Now, how far does gold go? Well, if we go ahead and we look at it from further back, so we come out here on the weekly, we see this channel line. And what has happened now is the channel line has retested on this weekly move, and on this week, it has begun to shoot up again. So this is officially broken out of this channel line. So we're going to watch this continue to head higher. So every pullback now that we look at, say here on the 1 hour chart, every pullback is a move to go higher. So we're looking for this one right here to come up here and come up to about the 3,400 range. And so a continuation to the upside. So look for every pullback in gold for a continuation up. It has held the channel. Well, you see it held here. It came back. It retested it. It held. It dropped a little. It looked like it was going to head lower. And when it pulled back and it failed here, but it made a new higher low and took off. So gold is a long and on every pullback until it isn't. At some point, it's going to really sell off, but that's not yet. So I'm going to show you some things coming here after we talk about gold here, which I have just been looking at the last few days. I'm going to talk about it because some things have really happened, and I'm going to talk about that. And that's what we're going to do next. We're going to go to a comparison chart here, and this is the 10-year bond along with the dollar. Now you can see those generally stay in correlation, okay? And what we've seen here is a divergence right here. So you see how the 10-year has been moving higher, its interest rate. So whenever the rates of a bond move higher, the price of the bond goes down. And generally speaking, when we have something like that, the dollar would tend to go higher. Well, in this case, the dollar has dropped off of a cliff, okay? And this has been very interesting to me, and I'm going to explain why I think this is happening. So a lot of people are blaming the tariffs of creating a possible recession. Let me tell you something. A recession was already in play way before tariffs ever became a part of a scenario, okay? This recession has been leading up for the last 3 years, and it's going to come to a head, and we're going to see a significant correction. Now, I'm not sure when that's going to be. It could be next month. It could be later on this year. It could even be in 2026. But I kind of have a feeling it's going to be the latter part of 2025. But we'll just have to wait and see how that pans out. This is an indication that that recession is starting to happen. And what do I mean by that? Well, when the dollar goes down, it means there is more supply. And so there's more supply of dollar. And generally, more supply of dollar means that comes into play based upon lending. When there's more commercial lending, then more dollars are in the system. And more lending means more, whatever it could be for homes, cars, whatever, it means more production. So that means growth, okay? Well, we're not having growth. We know that because the CPI numbers came in today, and customer sentiment is starting to wane. We're down now. We're getting close to the 2% the Fed has been wanting, okay? And we saw that in the CPI, the year over year today at 2.8%. So we are beginning to roll down. And what's going on here is foreign countries, the reserves are starting to dwindle. And what do you do when that happens? Well, you cash in the best type of collateral there is, and that's U.S. Treasuries, U.S. bonds, U.S. Notes, and you cash those in to liquefy for dollars to ample up your reserves. I believe that foreign nations are cashing in their treasuries. Hence, that's why the yield is going up, because less people are buying treasuries, more people are liquidating treasuries, that they're able to get dollars because they need dollars to fill their reserves. Now, it's no small understanding that the majority of cross-border exchanges happen in dollars. Generally, somewhere in the neighborhood of 78 to over 80% is where it fluctuates. So in order for, and having the tariffs does create strain on the system, but basically it pulls back the blanket on what's happening there under it and all the chaos that's going on underneath it. This financial system, global financial system, which is mainly made up of offshore dollars and the lending of them, the expansion and contraction of them, is what causes all the problems in our financial system. It's what's caused the 2008 financial crisis. Okay, a lot of people say it was housing. Well, housing just kicked it off. Okay, what really happened was the lack of dollar liquidity, and it locks up the system. And that's why we're seeing things like when we go and see things like we'll go out to the copper, so commodities, things like that. That's why we're seeing these things starting to drop. And then you go back and you look at, again, we went over this at the beginning of the week. You look at emerging markets, they're starting to fall off of a cliff. And as this begins to start, it's kind of like a small snowball and you roll it down a hill. It begins to pick up steam. It gets larger and larger and larger. The contagion gets bigger, bigger, and bigger. When we have lack of dollar liquidity in the system, it eventually locks up the system. And so what you're going to see, and I'm going to go to a dollar chart now, what you're going to begin to see is you may see dollar starting to fall. Now, we have dollar coming down to a certain point. So we have this level right here, which is a very big level. And we have the level further down, which is a huge level. That's around 97.38. So you could really see the divergence happen in the 10-year against the dollar if this starts to move down to here at the 97 mark. And what that's telling you is there is more selling pressure on bonds, okay? A lot of people think that the Fed has control of the bond market and can, raise and lower interest rates based upon, buying or selling bonds. It's not correct. The bond market has control of the bond interest rate, and the bond market will set the rate based upon whether we have primary dealers buying or selling, whether we have countries buying or selling. And what's happening is most are selling right now. And so, the feds, the government said, get to the banks and say, hey, buy these bonds. And so you're having to have banks come in and buy more bonds to make up the difference. And so with that being said, that is a clear sign that we have big issues in the offshore dollar system where liquidity is starting to dry up and we're starting to get a lockup. And if it continues, it's going to get worse, like that snowball rolling down a hill. It's going to get bigger and bigger and bigger. We have a lot of countries with dollar loans. Well, if dollar then comes down here and starts to rise in value, because now we've sold off treasuries, we've used up our dollar reserves, and there's still a lack of dollars, dollar is going to start to rise. And if dollar starts to rise, these loans that are paid back in dollars, they're going to default, because no longer will foreign countries be able to pay back in dollars because there's not enough dollars in the system. And we won't be able to have that robust exchange. We won't have lending. And something has got to give. And when that happens, Generally, what happens is first the global financial system begins to crack, and we begin to see recessions and depressions in other countries. The one who is most vulnerable right now is China, and this is shaking markets. It is kind of like an undertow, and if we don't get this addressed soon, that undertow will carry a lot of people with it out to sea, and they'll drown. They'll default. And when that happens, that's when you're going to see gold start to really sell off, because they're going to have to sell assets, meaning hard assets, to liquefy them, to pay for margin calls, to pay for, things they can't get out of. You're not going to be able to get out of a lot of these trades because they'll be locked up. There won't be a buyer on the other side of the trade. You've got to have a buyer and a seller when you do a transaction, when you make a trade. And if there's no buyers and there's only sellers, especially in these ETFs, which have now taken almost over 50% of the marketplace and replace, managed funds, which hedge and balance things out, we are leaning one way really heavy. And that is a problem, because if this happens, if we get a liquidity shortage, and it's a sharp one because we don't have dollars being produced in the system because there's no lending going on, we are going to have some things like you've never seen before. This is not because of tariffs. Tariffs is just unveiling some of this, but this is not because of tariffs. This is something much bigger in the system that's breaking, and you're seeing it. You're seeing it in the SOFR, in the overnight rates. I mean, you're seeing it happen, and these sharp moves, unprecedented moves. And this is telling us that something is seriously wrong. And if we don't get a handle on this, it could really lead further, not only into a recession, but a depression, and a very sharp depression. I'm not going to throw numbers out because I don't want to fearmonger, but it could be a severe depression. So something to consider, and I'm really keeping an eye on that 10-year along with the dollar in this diversion that's doing. We continue to get volatility in the markets, and it doesn't seem to be letting up. And so this divergence here is really concerning to me. But again, we look at volatility. We'll just take the S&P volatility. There's a lot of volatility indexes, but we usually look at the VIX. And the VIX has really been ranging here, but we've been going up to 60. We went this one today up to 54. And previous, we're up in the 50s still, dropping down to the 30s. So we're vacillating quite a bit. There's a lot of volatility, meaning a lot of people are worried, and you're seeing risk off happen. And that's what this is telling us. Anything, over 16, we're seeing big names starting to hedge. They're starting to take risk off. And we've been seeing this starting to build for a while. We've had this channel here, and it finally broke the channel, and it came back and retested. If we extend this channel over, the VIX retested that channel, and it looks like it's getting ready to push higher. And everything that I see tells me things are getting ready to push higher. So let's go ahead and go on to the NASDAQ. And we see here, I'm looking at this right here. We're looking at a pullback and a continuation down to this channel. But if we pull this back further, okay, this is simply a pullback that we're ranging in right here, in my opinion, to continue to make a down move at some point and break this low here. And this low sets at about 16.5. And we expect that to break and head down to that channel line we've had down there for quite some time. And so I'm still looking for that to happen. We may continue to range here tomorrow and come in and do this breakdown next week. We may see something happen over next week, but for sure, I do not believe that this is a turnaround here. I believe we go further down in the NASDAQ. So watch this. We're in a range now, going back down into the 1 hour. We're in a range now. Play the range, okay? Watch this move. We're watching to see right here if we break out of this channel right here. So we're watching for this channel to break right there, okay? And we're right there now. If we break out of that, retest it, we could go up higher. We could go up this high here. We could go up this high here. We're not really sure. We're just play it as we move along. But I do think we go up high there or there, and then we come back down, break, and retest this channel here, and then we could move up again to that level. We'll see what's going to happen there. But ranging now, looking for up, pullback, up, and eventually probably next week a break over here. I don't think we get a break unless something big happens tomorrow. Okay. Bitcoin's hanging on for dear life here and watching this very carefully. So you see the weekly chart there, and we're down here in the 4-hour. And the question is, do we get a bounce here? Okay. Do we get a bounce? And it's right there on the channel. It's right there. And so this is what you're looking for. Okay. You're looking for this move right here. We put in a double bottom. Okay. So we're looking at that move right there. Okay. And there is a possibility that we could range in here. Okay. Like we could come back down, come back up, hit, and then break out. And we could go to a respectable level. We could go to something like this. So this is what we're looking for in the downside channel. And we're looking for something like this. I'll squeeze it up a little bit so you can see what I'm looking at. We're looking for something like this. Okay. And that's what we're looking for. So I got that a little high there, but we're looking for a break like that, maybe, and a hold. And if that does hold there, you're looking for a move down to here. Okay. And that reaches that one target right there, which is setting at about 63 to 64,000. Then I would expect a retest of this, and we'll see what happens. If it holds and rolls, then we're going to break this, okay? But that would have to be next few weeks. But again, watch for a level. If we do break out here, this wedge, watch for a level of about 84,900 for a turnaround there down to about 64,000, okay? The other night we had this pulling back and then come back down, and we were looking for a break, but it did not do that, obviously for obvious reasons, because there was a 90-day pause. But again, we're retesting this upper channel. See this channel we broke right here? We're retesting that. And once it's finished retesting it, we're going to continue to the downside. And when we continue to the downside, it's eventually going to hit down here, probably next week now, at about 32,000. Okay. So we will probably stay in this range up here for some time. So when you're trading up in here, be mindful of this range. We're right there at channel. So let me pull this back so you can see the range here. Let me get this drawn out for you. So I'm going to draw you the downside channels here. And this is what we're looking for right there. And we got this one right here. We can go all the way right there. Okay. So we have a downside range here. Let's squeeze this back so you can kind of see. I can kind of extend that back for you. Okay. So we have a downside range here of about, let's see where that's going to be at. A move up would take us something like this. So you'd be looking like something like this. You're looking at about 42,151, and then that continuation down, up, down, retest, break, up, retest, and then break, retest, and then break down. Okay, it's not going to be an easy move down. Okay, it's not going to more likely be a straight move down. So we're probably looking to hit this level next week. But this is what we're looking for in the Dow. And if we push up and break this level right here, which sets about 41,148, we look for that move to go up to about 42,120, 42,000, somewhere up in there. And we're looking for that move to hit. Okay, so that's what we're looking for on the Dow. In closing tonight, I just want to take a look at the velocity of money. And we see that the velocity of money, coming back here around 1997 at its peak, and it's been dropping for a very long time. and clear down to the bottom of the move around second quarter of 2020. We've seen somewhat of a recovery, but now we're starting to see that roll over. This is something that's very important to watch, because what that means is people were starting to spend again, obviously probably because of the stimulus, and that stimulus money is starting to run out. So we're looking at this plateauing and could come back down to this level, which was the lowest in history around second quarter 2020, the M2 money supply. So keep an eye on this, seeing if it's rolled. That also explains that liquidity is starting to dry up. So if you want to know how to do correlations, how to trade the markets and so forth day by day, go ahead and click the link in the description below and come join us and see if this is for you. This completes this daily look ahead, and we will talk to you this weekend. Take care. Talk to you then. Bye now.